Welcome to another bootcamp module. Today we're going to spend some time looking at the common billing schedule, royalties, and the invoice that you will receive monthly from Floor Coverings International. So to start things off, let's take a look at the common billing schedule. So the common billing schedule is a list of the items that are frequent, that are regular, not necessarily monthly, but it outlines a cost of frequent and common billings. So you'll see things on here like the technology fee. And the way this reads, the technology fee on this common billing schedule, which is subject to change, but on this common billing schedule, it shows that it's $220 a month per user for the first user, and then it's $195 a month per user when you have 2 or 3 users. So if it's you and an office manager, it would be 195 times 2. When you get to 4 to 5 users, you can see the price per user drops to 190 and then 185 from there. The technology fee includes your Salesforce mobile, your Salesforce license, the Salesforce license for mobile, InspireNet Mobile, Office 365s. You can see the things that are listed here. And this starts upon activation. So the day that you start your Salesforce license, you can expect to start paying for this. Email only fee. So you might have, this is not so much for an office manager, but eventually you might have somebody that they just go and pick up product for you, maybe a runner, expediter type of person. You might even have your installers get an email account so that you have a way of keeping in contact with them. If it's an email only situation, it's $10 a month. Can I get my office manager to just get email? No, it doesn't really work because Salesforce does not allow the sharing of credentials. So an office manager would need their own Salesforce account. But if somebody doesn't need a Salesforce account and all you're expecting is to be able to pass email back and forth, then somebody could use just an email address for $10 a month. Website fee, $14.95 a month. Call center fee. You've got a $255 a month for the inbound call center, and then $39 a month, $39 per appointment for the outbound call center. So there's 2 call centers. The inbound call center is really just an answering service, and it's there to make sure that your phone is answered 24/7. The outbound call center, their goal in life is to book appointments for you. They don't get paid unless they book appointments for you. So they are highly motivated when a call comes in, when a lead comes in from the outside, whether it's through a website or through a lead generator or whoever that is, they are motivated not only to receive calls, but they will also make outbound calls. So if somebody comes in through an Angie's List, Home Advisor, Thumbtack, 3Ships, one of the lead aggregators, the call center will actively try to call them back and try to book an appointment on your behalf, and they're fast. I mean, they are really, really fast. So what you see, you've got 2 call centers. Now, the call center that's actively trying to book appointments on your behalf is typically referred to as the outbound call center because they will make outbound calls. The inbound call center is a company called AnswerNet, and the inbound call center, they can make an appointment, but their main purpose in life is just to answer the phone. And normally what they'll do is they'll send you a recording of the phone call that they took. So it's 2 different call centers, and they're billed differently. One is billed on a per appointment basis, and one is billed on the is billed just on a per month basis. Royalty brand fund. 5% royalty, 3% brand fund. There's an annual technology fee, and then there's a private label design board update fee, which is normally it's $1,500 or less. And normally what happens is at the beginning of the year, they'll finance will take that and break it up into 3 months. So normally what ends up happening is you'll get a part of the bill in January, part of it in February, part of it in March, just as a way of spreading it out so the cash flow sort of flows a little bit better rather than getting hit with all of it at one time. When you have one mobile showroom, maybe $1,500 isn't so bad. When you have 3 or 4 mobile showrooms, being able to spread that out over 3 months is nice. So this is a list of your common billings. Your common billing schedule might look a little bit different than this. but it's going to be really, really close to this. Now, at the top, there's something that's interesting. So according to the franchise agreement, you will pay royalties, you'll pay brand fund from day one on any job that you sell, right? Or I should say on any job that you produce. Royalties and brand fund are assessed based on a produced job, not the fact that you landed the job. So it is known to happen from time to time that somebody lands a job and then for whatever reason the customer cancels it or whatever, so the job never gets produced, and you don't pay royalties on that. You only pay royalties on jobs that are actually produced. But and according to the franchise agreement, you will pay a royalty minimum if you don't hit certain minimum sales levels or certain minimum produce levels. However, when you first start, your first month, maybe you go out there and you kill it and you land a bunch of work in your first month, but the reality is you don't get a ton of it produced. So it would be pretty common for somebody to have to pay a royalty minimum based on the fact that they didn't produce a lot in their first month. Well, this is known and it doesn't seem very fair. So even though it's not written in the franchise agreement this way, Floor Coverings International gives a grace period on the minimum, not on royalties. You will still pay royalties for any jobs that, even if it's in month one, you land a job and you produce it in month one, great. You'll still pay a royalty on that job, but you're not subject to minimums in case you didn't get up to the minimum level of sales. So for example, if you were in the September 2023 starting class, that means that this business would start up, the go date, the grand opening date for this class was September 25th. About 3 months after that is 90 days in business. And from time to time, if there's major holidays like Thanksgiving or Christmas, you'll see this is very generous. A couple of weeks, 1 week, 2 weeks may be added just to make sure that there's a grace period, right? So in this particular case, the go success date would be January the 1st. So your minimum in this particular class's minimums would start January the 1st. And then year two would then be on the 12-month mark. So this looks funny because it's 9 months, but it looks funny because there's that 3-month grace period. So year one royalty minimums would start in January for the September class. Year two, those minimums, when it bumps up for year two, it would be on October because that would make sense with a class that started towards the end of September. And then year three would be a year after that. You'll need to refer to your franchise agreement for minimum details, like what the exact number is, your territory, et cetera, et cetera. And you can reach out to your ops coach to get your copy of the common billing schedule. So the one that is specifically dated for your class. You will want to sign this, or you'll be asked to sign this, but make sure that it is for your class, and it will be. If you ask the ops coach for it, you'll get the right one. All right, so let's take a look at how royalties and brand fund are calculated. Royalties are based on 5% or the minimum. In this example, and I'm using this as an example, let's assume that in this example, royalties for year one is $1,250 per month. Brand fund is a 3% calculation, and there is no minimum. So minimums only apply to the royalty part, to the 5% part, not to the 3%. And it is calculated on produced sales pre-tax. So you're not going to pay royalties on sales tax. But if you look at your produced sales, based on the date that it was produced, that's when your royalties would be assessed. So let's take an example and see how this minimum thing works. Let's assume that you produced $45,000 in sales. You produced that amount in 1 month. Well, a 5% royalty on that would be $2,250. Brand fund would be $1,350. Perfect. So in this particular case, add those two numbers together and you'll see what your Floor Coverings International invoice is going to say for royalty and brand fund. But let's assume for a moment, again, we're making an assumption for this example that our minimum is $1,250, right? And this met the minimum, was over the minimum. Example two, let's say that you did $20,000 in produced sales. Well, 5% of $20,000 is $1,000. Well, $1,000 is less than the minimum. So that means that instead of paying $1,000 for royalty, you would actually be assessed $1,250 for royalty. Brand fund is still going to be 3% of 20,000. So it doesn't matter that this was a bad month in sales for the brand fund, but it does matter when it comes to royalty. And you can see that this means you're paying more than 5%. So obviously the challenge is don't drop below your minimum threshold levels. If your minimum is at $1,250, make sure that you are producing at least that much so that you're not paying more than a 5%. I mean, you know, you do the math, you're doing more than a 5% royalty. So royalty 5% or the minimum. And there's a 3 months grace period on the royalty minimum based on your go date. Just to be clear, it's not a grace period on royalties. So let's assume for a moment that in this example 2, let's say that this person was in this example 2, let's say that they were in month 2. Well, if they were in month 2, then the minimum would not be applied and they would simply pay the $1,000, but they would still pay the $1,000 because they're still paying royalty inside the grace period. If example 2 is outside of the grace period, you know, they're 6 months into business and have a $20,000 month, then yes, there would be the royalty minimum applied. And speaking of invoicing, let's take a look at an invoice. So this is a typical invoice. Yours will look very similar to this. You'll have different line items. You'll see on here, you've got your royalty fees that are calculated. One of the things that's really very convenient with the Floor Coverings International invoice is that it lists the GL accounts that you would want to put it in your QuickBooks. So when you get this invoice, you could put in on line 6200 a royalty of $25.30 and 68 cents. There's your brand fund. There's the answering service. So there's the $255 for the incoming answering service. In this particular case, there's quantity of 3 users. So 3 users at $195 a piece. You see that number. There's the website fee. Email account, there's no, they don't have, you see a 0 here. There's not anybody that has just a specific email account. And so that's a 0. And then there's a couple of notes here. So just something to keep in mind. If you have to change IT for some reason, so you've hired an office manager and that person left, you will want to take this link and get into the IT support desk and let IT know right away that that person has left. Otherwise, you'll keep paying for their software even after they've left. So a couple other things about the invoice. The invoice is typically dated on the last day of the month. Okay, so in this example, this is not correct, and this is just an example. So this would be dated like 2/28. It is always dated on the last day of the month. You'll normally get it in your inbox by the 2nd or 3rd, but it's dated the last day of the month because it's for the activities from the prior month. So let's assume for a moment that this was dated 2/28. Excuse me. Yeah, it was dated 2/28. Probably showed up in somebody's email on 3/1 or 3/2, maybe 3/3, but it's for the February activity. So you're always paying back. You're not paying forward, right? So you're not having to pay for something before you use it. You're always paying for something after you used it. It's invoiced on the first day of the, it's dated the last day of the month. It's invoiced on the first day of the month, and the ACH will draft out of your account normally on the 10th day of the month. Now, if the 10th happens to fall on a weekend or a holiday, it'll be the next day. So it might be the 11th or 12th, but they don't pull it forward and invoice you on an ACH like on the 8th or 9th. Note that PPA, the pay per appointment system, which we'll get into down the road, it is invoiced separately via the PPA escrow system. So you don't see your PPA charges on this invoice. You'll see that in your PPA escrow account. Now, if you have any questions on any of this, common billing schedules, how are royalties calculated, how's the brand fund calculated, how do I read my invoice? If you ever have an invoice that has an issue on it, just reach out to the finance department. Karen Wilkins and Lee Smith do a great job, and they'll be happy to help you if you've got questions or issues or need additional clarification. Thank you for watching, and move on to the next one.